Dramatic. Can I grab a glass of water, please?
Sure.
Sorry, I forgot to grab the second one.
Start video, start button.
Yeah, cool. Oh, start video, start webinar. Morning, everyone. We'll just give it a couple of minutes while people join. Thank you. Just while we wait for people to come in, if you look down the bottom, if you're joining us on Zoom, if you look down the bottom, you'll see a button that says Q&A. It's got a little question mark and a speech box. If you click on that Q&A button, it'll bring up the Q&A forum. And please feel free to just add questions as we go. I'll answer the questions as we get to the relevant part throughout the presentation. We've still got people joining, so we'll just give it another minute or two to give everyone a chance. And I think a few people have sent through questions already, so we'll make sure we answer those too. Okay, people are still joining, so we'll give it, just one more minute or so. Feel free to pop in questions about VAT as well. I know it always happens anyway, so I might as well invite them. What we'll do is obviously we'll cover corporate tax for the most part, and then at the end I'll do a little bit on VAT and kind of answer any VAT questions at the end. Okay. How are we going? Oh, participants are still going up, so we just need to give it another minute. For those of you just joining, I mentioned before, if you look at the box down the bottom, you'll see a Q&A button. If you're joining us on Zoom, click on that. It'll bring up the Q&A box. Feel free to just send in the questions as we go. I'll answer them in the relevant section. A lot of the questions that are already coming through about registration and thresholds we'll answer in the first few slides. So we will get to those as we get started. Let's see. All right. I think that's enough. We can get into it now. All right. So good morning. Welcome to another one of our corporate tax webinars. For those of you that have joined one of these before, you know that we go through these and it's a very sort of practical basis. So, you know, we don't go too much into the technical side of corporate tax. It's very much around what you need to do, you know, who does it apply to, what the requirements are. And we do spend a little bit of time talking about who pays tax versus who doesn't. But for the most part, it's trying to give some sort of practical advice. Anyone who joined the last webinar, I don't think there's anything new that we're going to cover. So the last webinar, I think we had all of the registration deadlines and everything. The only new thing we might be covering that might be new for you for this one, if you joined the last one, will be around business closure, which we've just got some more confirmation from the FTA. So we'll cover that. But For those of you joining for the first time, hopefully this is going to be very useful for you, especially, you know, as we go through the sort of practicalities of everything. So I shall, and again, sorry, we've still got some people joining. So for those of you that are just joining now, down the bottom, there is a Q&A. If you're on Zoom, if you go down the bottom of the screen, you'll see a Q&A icon. Click on that. It'll bring up the Q&A box. Send through the questions and I will answer them as we go in the relevant part. I was mentioning before, everyone ends up asking VAT questions as well, even though this is a corporate tax piece. So go ahead, chuck in some VAT questions if you have them, and we'll answer those right at the end. Okay, I will share my screen. One moment, please. Let's bring this up on the full screen. There we go. Sorry, just a second. And yes, that is a I Love Tax t-shirt, in case you were wondering. Okay, so look, for those of you that don't know me, my name's John. I run the accounting and tax part of Virtuzone. You know, we've set this up basically really to address corporate tax, and the knowledge that this is going to be, well, is already a thing that impacts every business. We have already helped a good few thousand companies, so we are seeing lots of, I guess we're very familiar with the issues that everyone is experiencing. So what we'll cover today, you know, these are the main, from all those companies that we've interacted with so far, these are the main questions that we get. So this is what we address throughout the session today. So who does it affect? When does it affect you? What do you need to do? And then the big one is, will I pay tax? We'll get into a little bit of, you know, how much tax people might have to pay, but hopefully we can establish before that point that you won't be a taxable business. Okay. The big overarching question, which is who does it impact, or who is taxable? So there is a very simple rule. Every single company in the UAE has to go through these compliance steps that we're going to go through. So it doesn't matter if you have zero revenue. It doesn't matter if you're in a free zone. It doesn't matter if all of your revenue is coming from outside the UAE. None of that matters. All right. What matters is that if you have a company, all right, then you have to go through these steps. All right. So you have to register, you have to do some accounting, and you have to file a tax return. We'll go through those. But in terms of who all of this applies to, golden rule, if you have a company, you've got to do it. There is a special couple of rules for freelancers, okay, or what's called natural persons. There are a couple of other types of entities that are considered natural persons, but the main one is freelancers. So I saw a question here saying, I'm a freelancer, but not generating any revenue. So to be very clear, a freelancer is someone who has a freelancer license, okay? So you're not a freelancer if you have a company, but that company is named after yourself, right? That's a question that I get sometimes. If you don't have a company and you're just operating under a freelancer license or an e-trader license, is one of the other ones, all right? And you're basically acting as yourself. There's no separate legal entity. There's no legal person. There's no separate company. In that specific case, you only have to worry about corporate tax if your annual revenue goes over $1 million dirhams. So, George, your question, you just need to double check that you are actually on a freelancer license, okay? Make sure that that's the correct category. And if that's the case, you don't need to worry about corporate tax unless your revenue goes over $1 million dirhams. But just to confirm, that is only for natural persons, so only for freelancers really, and e-traders. If you have, you know, anyone who has a company in a free zone or mainland or anything like that, all of this applies. Especially, right? Especially if even if you are not trading at all, but you have a company, okay, you still need to go through all of these steps. It's very different to VAT, right? So VAT, you sort of opt in at a certain point, okay? Corporate tax is the opposite. So every company is considered to be a tax-paying company, and you have to go through the steps to prove if that's not the case. Okay. So now that we've established that if you have a company, then you're going to have to do something, all right? The steps that we're going to go through are all around compliance, but the first thing we just need to establish is around the timing, okay? Now, everyone is, well, pretty much everybody is now taxable. So you've all crossed into your first taxable year. For the vast majority of you, that would have kicked in on the 1st of January, okay? So from the 1st of January 2024, you have become a taxable business. Now, there is one exception to this, okay? For companies registered in DWTC, so Dubai World Trade Center, you have a slightly different sort of regime when it comes to determining your tax year or your financial year. So what you need to do, if you are in DWTC, you need to check your MOA, your Memorandum of Association. And I think it's around clause 11 or thereabouts. There is a section that says fiscal year. And your fiscal year shows your financial year, that's your tax year. Generally, it goes off the month that you registered. Now, again, this is just for DWTC companies, okay? Everybody else that we are everyone else or every other free zone and the mainland, you default to a January-December financial year. So if you've never done any reports before, you've never done any financial statements, your default will be a January to December financial year. Okay, now, so if you're DWTC, reach out to us separately if you're in Dubai World Trade Center. Reach out to us separately if you're still a bit confused. But yeah, your deadlines will be slightly different. But for everyone else, we base the deadlines around a January to December financial year, tax year. And so the deadlines that I'm talking to with regards to filing and stuff will correspond to that. Okay, there are some questions, just some more questions here around, actually, we'll get to this in a second. So we've established what every company, well, who this applies to, it's every company and freelancers with over $1 million dirhams. We've established when, your first tax year is. So what do you actually have to do? Okay, so there's a minimum requirement for every single company. Like I mentioned before, you have to prove to the Federal Tax Authority if you're not a tax-paying business. So even if you have no revenue, right, you still need to prove this to the Federal Tax Authority. You still got to show the FTA that you're not a taxable business. So every company needs to register for corporate tax. You need to keep proper accounting records, and I'll go through what that means. And you'll also need to file a tax return. Okay, so the tax return is where you prove your tax position. So if you're, not a trading business, right, that's where you show that you're not trading. If your profit was under the threshold, it's when you file the tax return is where you show that your profit was under the threshold. If you are going for a free zone exemption, it's the tax return filing where you show that you're eligible for that exemption. So to actually do that, you need to go through the two steps first, right? So you need to register, you need to keep proper accounting records because your accounting records justify, what your tax position is. Okay. I'm just checking. So there's a question here. Some questions here around registration, specifically around foreign, so offshore companies. So if your company is registered in RAC, like I'll use RAC ICC as an example. Okay, so there are some rules around offshore companies. right? And the rules are if you have a connection into the UAE called a nexus into the UAE or some kind of permanent establishment in the UAE, or if you effectively manage the business from the UAE, then that RAC ICC company is considered to be part of, within scope of UAE corporate tax. So a couple of sort of default things is, if you're living in the UAE and you have a RAC ICC company and you're basically managing the RAC ICC company from, inside the UAE, it's pretty clear that that is a UAE resident company, right? So that would fall under corporate tax here. If that RAC ICC company has, owns real estate in the UAE, that's a connection. It's a nexus. So you'd need to go through all of these. So that's just specifically for those offshore free zones here in the UAE, which are a little bit different. Generally speaking, they will be deemed, to be resident in the UAE. But there may be some cases where they're not. But every UAE company, you need to go through it. Okay. I'm just keeping an eye on questions as we come through. On the financial year, there's a question here about can you have it from September to August? So if you want to change your financial year, right, you need to have a valid commercial reason to do that. You can't just change your financial year around to try and dodge tax. So if you have a default, January to December financial year, you can't try and move that because you don't want to, because you want to delay your tax, your start on tax. Reasons that you might be able to change your financial year. Let's say that you're part of a multinational group. The rest of the group has a September to August financial year, right? Then you can say, look, we are realigning our financial year to match the group. If you are, if you have other companies that already have, that financial year, sure. So as long as you have a valid year, then you can change it. But you sort of need to do that pretty soon because once you get into filing and stuff, it's getting a bit late. Okay, some questions coming through. What if my company was only set up now, or what if it was only set up, halfway through last year? So there's another rule that we look at. So if your company was formed before the 1st of June, 2023, okay? So if you've had a company for a number of years, or if you formed it last year, sort of in the first half of the year, then you became taxable on the 1st of January, 2024, assuming the default, financial year, right? So you became, for all of those people that have had company for a while, or from the first half of last year or before that, you became taxable on the 1st of January 2024. Where it gets a little bit confusing is if you started your company in the second half of last year or after the 1st of June last year, you actually became taxable straight away because you created your company into a live tax environment. Your first financial year will be either a short or a long year, depending on when you actually set it up, right? But you became taxable straight away. So these compliance steps, you won't have incurred the 10,000 dirham registration fine yet, but you should already have your accounting and everything up and running. So let's say that you only formed your business in, for example, August last year, okay? Because the tax regime started on the 1st of June last year, you created your business, or your business was born into a live tax environment. So your first, so basically you're taxable straight away. Your first tax year doesn't actually end until December 2024. So you have a sort of a long period, but you're taxable from that date that you started. So that's only if you started your company after the 1st of June 2023. If you just started your company, now, let's say you formed your company in April this year, that's pretty straightforward. Obviously, you're taxable straight away. You're after the 1st of January. same as everywhere else in the world, you're taxable from the outset. Still getting some questions here around thresholds. So just to be clear, we will go through some thresholds around who pays tax, but what you need to remember is that even if you're not paying tax, even if you're under a threshold, right, you still need to go through the compliance steps, because the only way that you can, avoid paying tax by being under the threshold is by submitting a tax return to show that you're under the threshold. Okay, you can't just sit back and go, I'm under the threshold, I don't need to do anything. Okay, you need to actually prove to the FTA that you're under the threshold, and that means you need to register, you need to do your accounting, you need to file a tax return. Okay. This is the big one. So this is where there's been a lot of news and a lot of, I guess, coverage. So previously, the FTA had said that you only had to register when you filed your tax return, which for most companies is September 2025, because that's the filing deadline for 2024 tax year. However, they realized pretty quickly that if they waited until then, they were going to get a huge rush of registrations, and it was going to be just a massive workload. So what the FTA have done is they have brought forward the deadline for registration quite significantly, right? So instead of a September 2025 deadline to register, the deadlines are now staggered throughout 2024, and the first one is the end of next month. So the way these deadlines work for registration, reminder, this applies to every single company. Okay, so if you're sitting there thinking, oh, my business isn't active or whatever, forget that. You need to register. Okay, so what you need to do, you need to look at the month in which your license was issued. So it doesn't matter what year your license was issued, you need to look at the month. So I'll pull out some examples, right? Sorry, I'll make up some examples. So if you were registered, let's say you got your original license back in February 2018, okay? The month that is on your license is February. So therefore, if you look at this table that I've got on screen, your deadline is by the end of May 2024 to register, because you are a February license company. Think of it like the birthday for your company. So if you've got a February birthday, right, for your license, then your registration deadline is May 2024. Let's say you registered in July 2010, okay? By this table, so you've got a July birthday, you've got a July license. That means that your deadline, if you look at this table on the screen, your deadline is September 2024 to register. So you have to register by the end of 2024. Let's say you registered in March 2023, right? So that the month on your license, or sorry, you got your license in March 2023. So the month on your license is March. So you look at the table, your deadline is June 2024. Okay. Now, this is like, it's sort of an arbitrary grouping, but it's totally understandable why the FTA have done this, because they want to spread out the, the workload. So don't try and work out any kind of rhyme or reason to it, right? They've just said, all right, we're going to bundle, put businesses into groups based on their registration month, right? And we're going to stagger it by that. So think of it like you've been allocated into a group based on birthday or whatever, and you've been given a deadline based on that. Do not miss this deadline, okay? Check your license. In fact, don't even bother checking your license, right? There's no point in waiting to register. Even if you're planning on closing the business, which we'll get to soon, right? You still have to register. There's no point in holding off, right? All you'll do if you wait until your deadline is you increase your risk of missing your deadline, and then you get a 10,000 dirham fine. All right. The FTA is, the head of the FTA has been on the radio, has said, look, there's no grace period on this. They've delayed it. There's not going to be any waivers or anything. So just get onto it. Again, there's no benefit in waiting. Okay, you have to do it anyway, so just go on and do it. Or get us to do it, of course. Okay. I'm just scanning through the questions to make sure. So the question here, so our company is established in the free zone. It's only registered this year. So if you're, hopefully I answered that. So if you're establishing your company this year, you are taxable straight away. Okay, so it's the same as the rest of the world, right? Now we have a live tax environment here in the UAE. So if you create a company today, it's taxable straight away, same as the rest of the world. Questions here. We have an LLC company in a free zone. Do we have to file a corporate tax return? Yes, absolutely. So hopefully I've established that now that every company needs to register, do accounting, and file a tax return. All right, there's a very specific question coming through here about registration from Tyrone. I'll answer that at the end, Tyrone, if you don't mind, or maybe drop us an email when it's if the taxable person updates are a little bit different when you're doing the registration. If you have to, especially if you have to change the type of taxable person when you're doing your registration, that where it gets a little bit complex. Yeah, and foreign companies are a little bit different. If you're a branch of a foreign company, you need to jump through, you basically need to push through some answers, and then they kind of come back on it, and then it gets accepted. I know that's a bit of a not great instruction. Maybe drop me an email. We've got details at the end about who you can reach out to. Katerina, is the registration deadline different if a company has 2 licenses? Very simple answer to this. Just get your registration in based on the date of the first license, okay? Because if you register with both and you get the wrong FTA agent or whatever, they're going to hit you with a fine. So just register based on the date of the first one. Again, there's no point in waiting to register. You have to do it anyway. So, just get on and do it now, and better to be safe than sorry, to use a very old cliche. Some specific questions coming through here. My company was established in June 2023. So yes, your deadline is August 2024. So regardless of the year on your license, right? So you said you got your first license in June 2023. Forget about the 2023. You have June as the month on your license. So therefore, your deadline is August 2024. Questions coming here around, we're a holding company. Doesn't matter what kind of company, what activities, how much revenue you're getting or anything. So you have to register. Okay, so please, regardless of what activity you're doing, doesn't matter. Just if you have a company, get in and register. The FTA isn't going to turn around, and once you've got that fine, you can't turn around to them and say, oh, I didn't think I had to do it because I was a holding company. Or I didn't think I had to do it because I had no revenue. The FTA have been very clear that you are required to do this, and that the fine is there if you don't register. So they're going to come down on this very hard. Okay. Accounting requirements. By the way, keep on firing through questions as we go. As you can see, I'll try and answer them in the relevant part. Sorry, just having some water. Okay, accounting requirements. So a question that I get a lot, people saying like, oh, I don't yet have a bank account, so therefore, do I have to register and all these kind of things? So you need to forget about, or you almost need to forget about bank statements, okay? So accounting records are what you will use to justify your tax position. Okay, so obviously if you have zero activity through the company at all, right, then your accounting will just have some expenses. You'll have, a few outgoings. And so when you file your tax return, that's all you'll be showing as your accounting. if you have an active business, right, you need to be able to show at least that your revenue has been recorded correctly. Okay. If you're going to be filing for an exemption, or you know, if you're going to be filing to say that you're under a threshold, you need to provide proper accounts to show that that is your tax position. Okay. You can't just use a bank statement and say, hey, look, you know, here's my bank statement. You've got to be able to produce a proper, you know, profit and loss account, and a balance sheet. Okay. You, the override or the overarching accounting standard that the FTA applies, they've established that at it's International Financial Reporting Standards, so IFRS. So there's a slightly different standard if you're an SME. All right. So if you're a smaller business, then there's called IFRS for SMEs. They just have some different reporting requirements around things like leases, and some other stuff. You'll notice that I'm not going into too much detail on this, because if we try and explain IFRS, we will take 3 hours plus. But generally speaking, if you're not sure how to do proper accounting, then you do, you know, obviously I'm going to say this as we are an accounting provider, but you should really be enlisting an accounting provider to get this done. Now, I know a lot of companies, you know, especially here in the UAE, do not have in-house accountants. You know, they don't employ an accountant as an employee. So, you know, have a chat to an outsourced accounting provider. Obviously, we are one of them, and I would say, of course, that we are the best. But you know, it's not something, you know, given that so much rides on what you have in your accounts, right? It's what's in your accounts, or what accounting reporting you provide. That's what determines your tax position. So that's how you get an exemption. That's how you show that you're under the threshold. That's how you show, you know, the expenses that you're deducting. It all depends on that being accounted for correctly. Now, this is where the other large penalty comes in. Okay, so the FTA have only really got two large penalties in place. Okay, aside from criminal stuff, right? So if you're deliberately committing tax fraud, that's a different story, right? I'm talking about the compliance steps. So 2 really big fines. 1 is missing your registration deadline, so don't miss it, obviously. 2 is if you don't keep these proper accounting records. Okay. Now, the reason they are so strict on this is if you look at the legislation, and we're going to go through the exemptions and everything, right? These are very, very generous. If you look at it at a global level, right? The exemptions that the UAE is providing in the corporate tax are very generous, very lenient. You know, there are things like the small business relief, where if your revenue is less than 3 million, you don't have to pay tax. In return for being, you know, such a lenient or generous in terms of tax exemptions, in return for being such a generous regime, what they require is that you do your accounting properly, so that if they are giving you an exemption, you know, they know that you have done it properly, and that, you know, you are claiming that exemption legitimately. All right. So I think it's very fair that they are saying, hey, if you don't, you know, hold up your end of the bargain, we're going to hit you with a big 10,000 dirham fine. Okay. Now, if you can't rectify those accounts, so if they say to you, nah, you know, you've claimed this exemption, but your accounting's wrong, you get the 10,000 dirham fine. If you then can't fix it, all right, that fine goes up to 20,000 dirhams. Okay. And it keeps accumulating. So what you don't want to be doing, you absolutely do not want to be waiting until September 2025, which is your filing deadline for 2024. You don't want to wait until then and then go, oh, okay, time to file my tax return. Let's try to do our accounts for last year, because you're going to be running around trying to find old invoices and everything to record, and B, you'll be pretty hard pressed to find an accountant who will be willing to take you on for a reasonable price. We all know there's going to be a huge rush at the end of September, because there's always going to be people that get onto this late. Again, there is absolutely no benefit to waiting right up until your deadline to be doing all of this kind of stuff. Okay. You just got to get onto it. I know I'm sounding like a scaremonger, but think about this logically. If you're going to be paying an accountant to do this, you might as well get it all done now when it's nice and simple, when we can do it and, do the things that need to be done at the right time, rather than waiting until September 2025 and then trying to do it all in a week and then filing, worst case, you file something correctly. Sorry, in worst case, you file something incorrectly, you miss out on an exemption, you end up paying tax, you end up paying fines. Don't just sit back and, hope that there's going to be a delay or something, because you'll end up in a pretty awful position. Okay. So we've done registration, we've done the accounting. Now we will go through filing the returns. So will I actually pay tax? A free zone company, we'll talk about this from the perspective of a free zone company, right? The mainland there is, basically the second two conditions apply, but let's talk about this from a free zone perspective. A free zone company basically needs to fall down through 4 layers before they end up paying any corporate tax. Okay. I'm really going to sort of simplify these. So there are other sort of hoops that you need to jump through, or all the other conditions that you need to meet, but I'll try and simplify it with the hardest condition on each one. So free zone company. The first layer, or the first thing that you look at, is, are you just selling to other UAE free zone companies? Okay. You notice there's 2 key terms there: UAE free zones and other companies. So if all of your revenue, or 95% or more of your revenue, is coming from other UAE free zone companies, from UAE free zone companies, it can be your free zone or other UAE free zones. It just has to be in the UAE free zone bubble. If all of your revenue is coming from there, then it's likely that you will get a free zone exemption from corporate tax. You still need to prove it. So you still need to go through and register. You need to do your accounting. You'll need to file a tax return. You'll also actually need to do an audit for the free zone exemption, because you need to prove that, your revenue is coming from UAE free zone companies. All right. But you should be exempt from paying corporate tax, provided you do all those compliance steps correctly. Okay. So think of that as like the geography one, right? So the geography layer, or the geography test, are you just selling to UAE free zone companies? Yes or no? Okay. If yes, great. You sort of stop there and you're going to be exempt. Let's say that you are selling outside UAE free zones. So that means you are selling on the UAE mainland, or you are selling outside the UAE, so overseas. So let's say you've got, 60% of your revenue coming from offshore clients. So, clients in Europe or Asia or wherever, right? And then the other 40% is coming from mainland or whatever, right? Or, 20% from free zones, 20% from mainland. The main thing here is that you're not just selling to UAE free zone companies, all right? So you're selling outside the free zone, offshore or onshore, doesn't matter. It's outside the free zones. What happens then is you can still get an exemption, but only if you're doing what's called a qualifying activity, okay? This is where the FTA have released a list of activities that they've said, okay, you're a free zone company, but you're doing these, one of these or mixture of these, you'll be exempt from paying any corporate tax. Again, you still need to go through the steps, the compliance steps, to prove it, but you will be exempt from corporate tax. I'll go through that list in a second, but the main thing to remember here, the main thing to note here, generally speaking, services are not included. So if you're doing marketing consultancy or IT or software consultancy, anything like that, management consultancy, or you're charging management fees to, a client overseas, services are generally not included. The only service that is included in the qualifying activities is logistics services. And even that definition is quite narrow. Okay. So the qualifying activities are very heavy industry based, things like shipping, things like trading in aircraft, or heavy, what I call, institutional finance stuff. So things like insurance and reinsurance, some other bits and pieces. But I find that the majority of the smaller companies are engaged in services, and those are not a qualifying activity. So you're a free zone company, right? The first one we looked at is a geography test, but let's say that you've got clients outside the free zone bubble. Let's say that you're not doing a qualifying activity, all right? So you've missed criteria 1 and you've missed criteria 2. The next thing we look at, and this is where it also applies to mainland businesses, okay, is we look at your annual revenue. And this is where we look at a rule called the small business relief. So if your revenue is less than 3 million dirhams, annual turnover, call it turnover, sales, fee, gross fees, your top line revenue. If that's less than 3 million dirhams, great. You don't have to pay corporate tax. You don't have, it's only in place for 3 years, so 2024, 25, and 26. But it's basically a nice, friendly rule that the FTA have brought in and said, if your revenue is under 3 million, great, we're not going to bother you. You're exempt from paying corporate tax for the next 3 years, as long as your annual revenue in each of those years is less than 3 million. Now, I know I'm repeating myself constantly here, but to get that small business relief, right? So let's say your revenue is 2.5 million dirhams. You're under the 3 million. You need to register for corporate tax. You need to keep proper accounting records because you need to show that your revenue has been recorded properly. And then you need to file a tax return, or you need to file a return. And in that return is where you will say, look, my revenue is less than 3 million. Please give me the exemption. And they will go, great, sure, thank you. See you next year. Okay. Let's say that you are a free zone company, but you sell outside, you have clients outside the UAE free zone bubble. You're not doing a qualifying activity. And let's say your revenue is 4 million. All right. So you've missed criteria 1, 2, and 3. All right. Only at that point will the FTA start looking at your profit. Okay. So we've been talking about revenue and revenue sources up until now. But once we miss those 3 criteria, we start looking at profit. And that is when we look at this tax-free threshold of 375,000 dirhams. Okay, so let's say you've got revenue of 4 million. Okay, and let's say that from that 4 million revenue, you make a profit of 1 million dirhams. Again, this is you make a profit of 1 million dirhams. That means you're paying tax on 625,000 dirhams. So the way it works is you've got 1 million profit, right? So 4 million revenue, 3 million expenses, 1 million profit. The first 375,000 dirhams is tax-free of that profit, and the remaining 625,000 dirhams is taxed at 9%. Okay, so 1 million dirhams profit, you'd end up paying tax of around 60,000 dirhams. So let's use an example. We'll jump through the qualifying activities, and then I'll go through sort of an example of who might be paying tax. So I won't dwell on this slide too long, but just for sake of completeness, these are the qualifying activities. As you can see, it's very much based around heavy industries, or institutional finance stuff. A lot of people ask me about Part C, which is trading of qualifying commodities. Okay, that only applies if you're doing them on a recognized commodities exchange. So you can't just be buying and selling in your own right, something like foodstuffs or anything like that. It needs to be traded on a recognized commodities exchange. There is another one here for distribution of goods. So Part L, so third from the bottom, distribution of goods and materials from a designated zone. For those of you that are registered in a designated zone, I'll go through something slightly different for you. Okay. Sorry, I'm jumping around a bit. All right, let's walk through a couple of examples. Okay, we've got 15 minutes left and I just want to cover a couple of things. So let's say that you are a marketing consultancy. Okay. Let's say that you're a marketing consultancy and you have one client who is based in Europe. Okay. So we know straight away that we've missed out on the first two criteria. Okay. Because your client is not a UAE free zone company, it's in Europe. All right. So you missed out on the first criteria. We know that marketing consultancy is not one of these qualifying activities. Okay, so you've missed out on the second criteria. Let's say that your revenue is 2.5 million dirhams a year. That means that you have qualified for small business relief, right? So all you have to file with your tax return is, you still submit your financials, but it shows that your revenue is less than 3 million, so you don't pay any corporate tax. So you stop there. Okay. Let's say that using that same example, you're a marketing consultancy with one client in Europe, but your annual revenue is 4 million dirhams. Okay. So in that case, we know that, again, client in Europe, not a UAE free zone company. So you've missed criteria 1. Marketing consultancy, not a qualifying activity. You've missed criteria 2. Your revenue is more than 3 million. So you've missed criteria 3. You don't get small business relief. That's when you are a taxable business and we start looking at your profit. So the big question is, right, if I've got, revenue and I'm going to be paying tax, all right, what can I legitimately claim to reduce my profit down to, a reasonable level? All right. Now, the biggest one that we have here in the UAE is owners paying themselves a salary. Okay. So where you own your company, all right, you obviously can't just pull out a ridiculously high salary to clear out all your profit so that you pay no tax. Okay. If you are the owner of the company, you are considered a connected person. All right. And that is a term in the tax law, a connected person. Any transaction with a connected person needs to be at market value, or what's called arm's length transaction. What that means is that if you are the owner of a business, right, you can pay yourself a salary, but only to the extent that, the amount you pay yourself is the same as what you'd receive if you were doing that same role for an unrelated company. Okay, so if you were, let's say management consulting, you're providing management consulting services overseas, revenue is 4 million, right? What kind of salary could you pull out as the owner of that business? Well, you'd be looking at, okay, what does a management consultant earn in a, actual management consultancy where they're not the owner? Or what does the, head of strategy earn at a bank? Those kind of things are where you would be looking to get a guide for market value for what you can pull yourself out as a salary. It's the most common question I get. Hopefully that helps if you are in that position. Please don't go and just wipe out all of your, your profit, pulling out a huge salary that is unrealistic. They've been quite clear about this, that it needs to be a reasonable amount, it needs to be market value, arm's length. Okay, so using that same example before, marketing consultancy, 4 million in revenue. Let's say that your expenses after you've withdrawn a salary, you've maybe paid some other employees, you've got your licensing costs, a few other things, your residual profit after you've paid all those expenses, using the same example, 1 million dirhams of profit. To repeat myself, first 375,000 dirhams of that million is tax-free, so 0%. And then you're paying tax on the remaining 625. So any amount of profit over 375,000 is taxed at 9%. But the main point I want to make here, or two main points, you only are paying that, right, if you've fallen through the 3 criteria that we've already gone through. So the geography of the free zone, the qualifying activities, and your revenue is more than 3 million. Only if you've failed those 3 and your profit's more than 375,000 will you be paying any corporate tax. So, like I said, it's quite a generous regime, especially for small businesses. It's very favorable, as long as you go through your compliance steps and make sure that you prove your position. Okay. A couple of specific points I want to go through. Again, please, there's still more questions around registration. A lot of these are quite specific. We'll have details at the end about how to reach out. And for the more complex questions, we can sort of help them through that medium. Question here, Suzanne, would paying a bonus work? How would that be compared to? So when the FTA are looking at how much an owner has paid themselves as a salary, and just to clarify, right, the reason that an owner would want to pull out a salary as opposed to just paying themselves a dividend is because a salary is a tax deductible expense, whereas dividends are paid after tax. So dividend is a post-tax distribution, basically. So if you are if you are an owner of a company and you're entitled to take out a salary, then that's obviously preferable because that saves you on tax. The way that the FTA will look at this is they don't just look at what was paid as written down as a salary. They will look at the total remuneration that was paid to that owner. So that would include salaries, includes bonuses. It also includes any other benefits that were provided to that owner. So if the owner of the company has gone and put their kids' school fees through on the company accounts, that is deemed to be salary or remuneration to the owner. So that all adds into the sort of market value. Same as if the owner has got a company car but is using it on the weekends. If some owners have put their residential rentals through their companies, all of that gets considered as remuneration to the owner, and that all needs to be sort of market value at a total level for what that owner would get paid on the open market. Question here, just before I jump into some specific things. So how can we register a free zone company owned by a foreign or offshore company? So what we've found that works is that, and again, I think the FTA will be addressing this, but I understand that I'm trying to put this in the right way. So what we have found is that when you are registering a company, say you have a company registered in Creative City, right? Or in, no, let's say Maidan. Let's say you're registered in Maidan, and you're owned by or the entity is owned by a foreign company. What you can do is you can put down for the owner company, you just put down the same jurisdiction. So you just put down Maidan for the owner, and then you can normally write in the notes that it's a foreign company. You'll still attach the offshore company owner documents, right? And generally they will make a note of the FTA will make a note of that and put the registration through. Sometimes they will come back and ask, but you just need to point out that that it's an offshore company owner, and and it's not an option to be selected. So that's how it's been working, and they've been accepting that. Some questions here. Free zone companies just selling overseas, are they exempt? No, absolutely not. So this is a very common thing that people have got wrong. So if you're a free zone company and you are just getting revenue from overseas, you are not exempt, right, by virtue of the fact that you're just trading overseas. All right. So overseas income to a free zone company is absolutely taxable, unless it's a qualifying activity or you're under this, we're under the small business relief, right? Okay, I'm just going to jump through some specific examples. Oh, sorry, some other things that have come up quite a lot. So one thing that there seems to be a lot of misinformation around is around closing a business. So if you're restructuring, or some people have, I've been speaking to people that have been holding off registering because they're not sure if they're going to keep the business open. Okay, so that ship has sailed. All right. So if you closed your business, let's, use the most common example. If you closed your business before the 1st of January, 2024, right? Your business was closed before it became taxable, so there's no need to file a tax return. Okay. If you close your business after the 1st of January 2024, right, you have to file a tax return. All right. So even if you had, no income, right? So we've had clients that close their business on like the 15th of January. Okay. So they have to file a tax return just for that 15-day period, right? Even if they close the business on the 2nd of January, they still have to file a tax return for 2 days. All right. This is the same way it works everywhere else in the world. Okay. And we've confirmed this with the Ministry of Finance and with the Federal Tax Authority that this is absolutely a requirement. Okay. Think of it. Oops, sorry. Think of it this way, right? Let's say that you had a company and you were good, you closed it in April, right? So you're closing it down this year. Let's say that you made $25 million in that period. All right. You can't just close your company and run away and, not pay any tax on that $25 million. You need to file the tax return from the 1st of January up until the closure date and declare that tax and pay that tax. It makes no difference if that $25 million is zero, right? Because as we've established, you have to actually prove this to the FTA. So if you have closed your company, or you do close your company after the 1st of January 2024, you have to file a tax return for the period from 1st of January up until the closure date, right? And the only way you can file a tax return is by going through the compliance steps, right? So you still need to register. You still need to file a tax return, right, with the accounting and everything. And then you need to deregister after that and, get your tax clearance. In most parts of the world, shutting down a business, right, the tax requirements or tax clearance is the hardest part of closing down a business. And the UAE is just the same. I mean, any of you who have ever closed down a company in Oman or in Saudi will know very well that, closing the company from a registration point of view is one thing, but actually getting tax clearance is another thing. And the UAE is no different now. Okay, there's a question here, a very good one, which I always like to cover. Business closed February 2024, trade license is not renewed. So if you get your registration, and I confirmed this with the FTA the other day, I went and met with them. If your trade license expired less than 3 months ago, they will accept your registration, right? And you can go through, you can file your tax return and then deregister and get your clearance that way, right? If your trade license has been expired for more than 3 months, they have said that you need to renew it, go and register for corporate tax, file the tax return, and then deregister. Now, first thing I would do if your license expired more than 3 months ago, I would still try and get that registration in, right? And just try and agree with the FTA agent that you can explain to them that you're just doing it so you can file a tax return and close. Hopefully they will accept that. But what you must not do, you must not just sit there and go, close my business, nothing to do. All right, because you'll get the 10,000 dirham fine for not registering on time. You'll get the fines for not filing your tax return, and you'll obviously get the fines for not keeping your correct accounting records as well because you haven't done anything. Okay, so the question here around the person that closed their business in February 2024, you need to file a tax return and do it sooner, get your registration in as soon as possible before your trade license lapses for more than 3 months, because otherwise it's going to get a lot more difficult. Okay. All right, that is time. So a couple of things. Actually, I'll just jump to here. So obviously everything we've gone through today, if we can help you out with any of it, we have very, very good and very, very affordable packages. We specialize in, the small business end of the market. No point in going to pay a big four if your turnover's, a couple of million dirhams or just even if you have zero turnover, right? We have specialized packages for those types of companies as well to make sure that you're compliant. A couple of other things. So, and to get these packages or to get our services, you can either just go to taxready.ae or you can just drop me an email. Both details are on there. If you mentioned that you were attending a webinar, then any of the packages will include free tax registration and a discount. A couple of other things. If you are registered in a designated zone, okay, which is a different type of free zone, or if you are doing if you're just doing e-commerce. So what I mean by that is if you are, buying from country A and shipping it and selling it to country B, and it doesn't touch the UAE, there is a way of that being exempt as well. It's a bit of a technical thing, so I don't go into it too much on these webinars. But yeah, let's say you're buying from China and shipping to Europe, right? You can be exempt from corporate tax, but you've got to go through some sort of certain steps. I'd recommend you drop me an email or go to Tax Ready if you're running that kind of business, because we can probably help you in terms of structuring for a sort of tax efficient outcome. But yeah, thanks again. We'll be holding another webinar in a little while, especially if there are any big updates from the ministry. We will certainly try and run one quickly after that. Robin, yes, there is absolutely a flat fee option for zero turnover businesses, which is discounted if you do it as a one-off. So yeah, we've just got the monthly prices here just as a guide, and if you pay in sort of a one-off, you get a discount as well. Okay, thank you everyone. I really hope that was informative. Drop me a message or go to taxready.ae if you'd like any other help. Obviously we have helped thousands of businesses and would love to help you as well. So thanks again. Hopefully talk to you soon, and have a great week.